Jim Hiles coming at you live from First Capital and Go Plan 101. So here's the question. Should I invest in a mutual fund that has active management? We'll talk about what that means. Or an index fund, which is passive management. And I'm talking about here we are in November of 2020, still dealing with COVID and all of the economic issues that we've had in the markets this year. Well, there's one word that we use. It's a little bit of geek speak. It's called dispersion. And basically it's when you disperse things, right? They go, whoo, they could disperse things all over the yard. So when you have a different market, like we've had in 2020, where assets behave significantly differently from, they're all spread all over the place. You got returns spread all over the place in 2020. You have technology that's done real well, you have energy that's done it really badly. So you have an opportunity when things are dispersed, these returns are spread apart or all over the place, to actually benefit from active management. Meaning, if you have an index, you're going to get all that sort of wrapped up into one bucket. And you're going to have the good and the bad sort of stuck together. And that's what you get in an index performance, which could be the average index performance. With a dispersed marketplace, where you have in 2020, if somebody is good enough to figure out that an asset has higher upside to it because it's been beat up so bad, just because of COVID, and it will come back, then you might find a better rate of return with somebody's ability to pick undervalued stocks. So we like, right now, active management. And things like mutual funds, actively managed mutual funds, or even actively managed ETFs, or buying the right stocks in the right place, we think have a true advantage over just doing indexing right now in the scheme of things. Not forever, but certainly right now. Something to think about. Jim Hiles signing off. Remember dispersion. Thanks.